Good evening, and thank you for making the time to be with us tonight. My name is Amy Bach. I'm one of the founders of United Policyholders, and we're so sorry for the circumstances that brought you here with us this evening. But we're so proud and grateful that we have so much to offer you in the way of honest, straightforward, no strings attached guidance on navigating the strange landscape you now find yourselves in. Through our Roadmap to Recovery program, we have been providing this kind of guidance to people who have lost homes in wildfires and hurricanes. For many, many years, we've been curating the information we'll be bringing to you tonight. And I want to thank you all for your attention. I want to reassure you that tonight's program is being recorded. We will have the recording up on our website within a couple days. So while you're welcome to take notes, you can also know that if you want to just have your ears open and relax and let the information come to you without having to write things down, just know that both the slide deck is available to you now. I'm going to show you how you can download it and follow along. And also the recording will be available to you. So don't sweat if you miss something. You'll be able to watch the recording and go back at your convenience and catch whatever it was that you want to be sure about. So tonight we're going to be covering how to read and understand your insurance policy. For those of you who were with us last week for our orientation, you already know a little bit about us, so we're going to go very short on the intro here. I want to introduce some of the people who are going to be helping answer the questions that you are welcome to put in the Q&A tonight. But I do ask that you try to let us get the information out there to you before you start asking questions, because there's a pretty good chance that we're going to answer those questions in the material we're going to be presenting to you this evening. So we have Amy Ludwig, who is handling the tech tonight. We've got Alexis Ritchie, who is a program specialist with United Policyholders. Valerie Brown, also a program specialist with United Policyholders. And Sandra Moriarty, who is an incredible expert volunteer, former staff member, and a great friend to our organization and to policyholders. So this is the team that we've got tonight, along with myself, and we're going to get going. So here's how you can download tonight's deck. You're going to go to our website, uphelp.org. You're going to go to events on the far right of the nav bar. You're going to click on tonight's program. You're going to click on the slide deck there that we've got the arrow showing you how to do that. Okay. So just a very little bit about us. We're a national 501c3 nonprofit based here in California that has been a trusted information resource and a respected voice for you, insurance consumers, in all 50 states for over 3 decades. So we have a 34-year track record and expertise in helping wildfire impacted households and communities recover through information, tools, resources, and the advocacy work that we do, and the events like this. This program is through our Roadmap to Recovery work stream that includes post-disaster guidance and services focused on financial, insurance, real estate, and construction decision-making, plus emotional recovery, which is always part of the spectrum here. Our work is funded by donations and grants and volunteers, consumer-oriented professionals who have been involved with our organization for a long time and donate some of their time pro bono to support the information and guidance we offer to you. You can't hire us. Our services are free, but they're limited. We can't be your free public adjuster or your free lawyer, but we have a lot of expertise to share with you. And again, no strings attached. Our partners include other nonprofits, state and federal agencies, and professional and trade associations. Our team consists of our professional staff, our partners, and our volunteers. If you have stopped at our table, either one of our tables at the 2 disaster recovery centers that have been open the last few weeks, you may have met some of our disaster survivor volunteers. We also have in our family um, consumer-oriented professionals, including lawyers, public adjusters, independent adjusters, CPAs, financial planners, builders, and real estate professionals, and also remediation professionals that specialize in cleaning up smoke damage and remediating damaged homes. Just a quick reminder, we're here to give you general guidance, not legal advice. Although I am in fact an attorney, I'm not here to give you legal advice. If you have a specific legal question, we recommend you consult an experienced attorney. There's no shortage of them offering their services to you at this time. We will be hosting some of our pro bono legal help clinics as we go through the long-term recovery process with you. We don't endorse any of our sponsors that you'll find in our professional help directory or the speakers at our workshops, but obviously we do our best to bring you reliable, up-to-date, and accurate information that's going to be in your best interest and only your best interest. And that's me. I've been an insurance consumer advocate since the 1980s when I saw how much power insurance companies wield in legislatures and in the courts. And I felt that insurance consumers really needed to have a safe place to go on the internet and in the real world to get the straight scoop and also to have a voice when decisions are being made that impact you as a property owner who's bought insurance. So I've been involved for quite a while now in the situation in California that has resulted in a lot of you having to be insured through the FAIR plan. Where we've been working to try to repair the situation as we go, and we are still working as we go through this process here. I'm joined tonight by Sandra Moriarty. She's got incredible credentials. She has 30 years of experience in insurance claims and claims management. She's been representing our organization on a curriculum board at the Department of Insurance now for quite a few years, making sure that the exams that they require insurance pros to take have the right questions. She's also got a lot of letters after her name. She is certified in fire and smoke, water restoration, microbial remediation, and she also does a lot of dispute resolution. That's kind of a passion for her, claim dispute resolution. This is the library that we set up for your fires. This one is for the Los Angeles wildfires, but we also have one for the mountain wildfires. And in these libraries, we have curated step-by-step guidance that follows the timeline of a typical wildfire recovery, the decisions that you are faced with at each step of the way, and we offer guidance to help you with those decisions. You also find on this library updated information. So we just got notice today about the details of the coordinated debris removal program that LA County is offering. That you'll find that information in our library. We update it pretty much all the time as things develop. We also offer on our website samples of letters for you to customize to be that squeaky wheel that gets paid and follow our advice. We have tips from people who've been there, done that, lost a home in a wildfire, pay forward the help they got from us by sharing some of their lessons learned so that we can turn around and share those with you. We also have our professional help directory where you can find some of the professionals that have been supporting us for quite a while, and that this is their specialty, is helping people with insurance issues and large loss claims. You'll find on our website information about events like this and the series that we are offering through our Roadmap to Recovery program. We're going to be covering tonight digging into your insurance policy, figuring out what benefits are available to you, calculating those maximum amounts, and then understanding things like depreciation and other aspects of the claim process that involve math and can be frustrating. And so we're going to be shedding light on those things. There's just a few things I want to share here. The what we call rules of the roadmap. So California has more regulations and laws to protect you in the post-disaster insurance claim process than any other state. But The adjusters, plural, assigned to your claim are supposed to know them all, but they probably don't. In a situation like this, with the number of homes down that we are facing here, a lot of insurers will bring in adjusters from out of state. They will hire independent adjusters. They will hire freelancers, and they come from all over the country because they don't have enough in-state folks. And some of them will be good, and some of them will be not as good. And we know that a lot of you are already having issues with reaching an adjuster, getting an answer, finding somebody. And we absolutely empathize with that, and have some suggestions for how you can get through this. Uh, there's no getting through it painlessly, but um, taking strategies that have worked for other people and using those for yourself, including the power of filing a complaint with the Department of Insurance if your insurance company is not moving fast enough, and also going up the chain at your insurance company, or even using social media to get attention if you're not getting the service that you paid for when you bought your insurance. So just a couple more reminders. Getting a full and fair insurance recovery is really requires you to be somewhat proactive. And really, one of the most important things is for you to be realistic about the process. It's not like what the ads show. And you think about it more as a business negotiation. It's your assets that are at stake. It's your financial health at stake. So getting accurate valuations of your dwelling loss and your contents losses and your other losses is worth you putting some time in. And if you cannot do that, it's worth you getting professional help to do that. Because you really, if you sit back and think my insurer is going to handle all of this, um, that chances are um, that you're not going to get the full recovery that you need. So it's important to get those second opinions and those valuations. Using our resources really does increase your chances of recovering all available insurance funds. Two more points I want to share before I turn it over to Sandy. So in California, we have two buckets of money that should be coming your way if they haven't already. And you want to make a clear ask to your insurance company for those two advances. One is for 30% of your dwelling limit up to 250,000, and that money is not supposed to go, it doesn't come out of it doesn't reduce your dwelling limits. It comes out of your contents coverage, and that 30% of your dwelling limit up to 250K is for you to use to start replacing your clothing and your necessities without having to do that inventory. But if you want to get the full amount of your contents benefits, you're either going to have to work out a waiver with your insurer, or you're going to have to do that itemized inventory. And down the road, we will be offering you webinars on how do you deal with your contents claim. So I just want to remind you, there's a lot of noise out there, a lot of people talking at you, offering information and help. And I like to hope that most of it, all of it, is well intentioned, but some of it might just be flat out wrong. So, why we appreciate you being here with us, why we bring you all this information, is because, again, we're not here to sell you anything. We are just here to give you good info. And so, to that end, I say, look, if the 30% advance um, is the up to 250,000, if that's close to your contents limit and you decide you don't want to go through the hassle, no one on our team is going to judge you for that, right? You got to do what's right for your household in this situation. But anyway, these two advances are for total losses only. So you've got that one bucket, and there is some confusion about it. Um, that it's calculated from your dwelling limit, but it's for contents, okay? And then the second bucket that should be advanced to you is 4 months of additional living expenses. And we'll be going into more detail about that. Um, One thing to know about the California Fair Plan. Lots of talk about the Fair Plan out there. It is not a government program. It's a government mandated insurer of last resort. Technically, it's what's called an involuntary association of private insurers. It's run by private insurers. It is not subject to the Public Records Act. There's a lot of there's a lot of work to be done to increase transparency around it, but it is run by private insurers, so it's really important for you to understand that. The Department of Insurance has authority over them, and they are absolutely accountable to you. They have the same obligations to comply with California regulations and laws that any insurance company has, and that its members have. So the members of the FAIR Plan, the members of that association are the brands that you know. They are those admitted insurers that you know: State Farm, Farmers, Safeco, Mercury, etc. Um, Fair Plan does offer more limited coverage than a traditional policy. Um, Hopefully, if you have a Fair Plan policy, you also have a companion policy called a Difference in Conditions. But we're not going to go into that in much detail here, because we have a lot to cover tonight. There are some unique challenges with the Fair Plan, but the important thing to remember is if you speak up, you keep that paper trail going every day, either in a notebook or on your phone. If you want to use notes or whatever method works for you, keep that paper trail going. Take notes on who you talk to every day, what they said, what their job title is, and how you can reach them again, because that is what's going to get you through this. Having that paper trail when you're sleep deprived, when you're not at your clearest mental acuity, it's incredibly important for that, to keep that record. It's also important to have a record of how your insurance company handles your claim, so that there is this history on paper. Um, Present your request clearly and in writing. And if an adjuster tells you a rule or requirement that doesn't sound fair, ask them, please show me where it says that in my policy. That is what we call speaking up. State of mind, give your insurance company a chance to do the right thing, but don't be a pushover. Understand this dynamic. It's a business transaction. Your insurer is a for-profit company motivated to limit claim payouts. It's in your best interest, as I said earlier, to get independent opinions on the value of your losses and what you're entitled to, so you can maximize the value of that insurance that you paid for. Should you expect a fight? No. Some claims go smoothly. We hope yours does. But when large dollars are at stake, disputes often arise. From our experience and the thousands of people that we have worked with over the years, being politely assertive, informed, and empowered is the key. So we're going to take a deep breath, and I'm going to turn it over to Sandy to take us through how to read and understand what money is available to you in that policy that you bought.
Let me just get everything going here. Sorry.
That's okay. While Sandy's getting her screen
There we go.
share going, you can see that the Q&A is open, and I appreciate that people are being patient and letting us get through the materials. We will do our best to answer all the questions that come in, and if we don't get all the way through, I ask your patience. We will get to everything over the next months and year, I promise.
Just get used to going back and forth here. Sorry about that. Okay, go to our, okay, so where to start? Hi, everyone. I'm Sandra Moriarty, and sorry that we are here under these circumstances, but glad we can give you some information. Totally jam-packed full of information tonight. So like Amy said, you can come back and revisit it. Some things are going to be just a little different depending on your policy. There's a lot of different policies. So, but this is sort of the general overview of how to do it. So where do you want to start? The policy really is the thing. So ask for your policy, make a written request. and ask for a complete copy. I like ask for certified. The law requires them to give you a copy. They don't necessarily require certified, but ask for it anyway. UP has sample letters that can help you write those letters, and then print it out, highlight, annotate, mark it up, and that should keep you going. Okay, so we're going to jump right into it, and this we're going to go through the different coverages. There's a lot of coverages. Some are very obvious if you look at your declarations page, which is the part with the numbers on it. Some of them are not so obvious. So we want to make sure that you have the full picture of what your coverage is, so you can, make your claim and recover what you're owed. So these are the main buckets in general. Now, some companies have different letters. These are the most common letters. State Farm, if you notice the bottom, coverage A includes the dwelling and other structures. So they're a little bit different, and coverage B is personal property, but same idea. So these are them. Coverage A is your dwelling, which is your home. Coverage B is other structures. Coverage C is personal property, also called contents. Coverage D is loss of use, also called ALE, or additional living expenses. And then you have all these other sub coverages that we'll get into, but these are put here because these are pretty the significant ones here: the trees and shrubs and plants, code upgrades, and debris removal. So we're going to hit all these individually. Renters policies really work almost exactly like homeowners policies, except the structure itself, the building, is not covered under the renters policy. So if you're a renter and you have a landlord, you need to coordinate with them and their insurance company to have the cleaning done right. Just know that if you've got a smoke loss and your contents need cleaning, it doesn't work to clean your contents if the house hasn't been cleaned yet. Ideally, the contents are removed, the house is cleaned, the contents are cleaned off-site, and they're brought back. But you need to work with them. Another issue is remind your adjuster that you're not in control of repairing the structure, and you need your ALE. Okay, mobile manufactured homes, exactly the same. Just there's a few little esoteric little differences, but for the most part, they're the same. Okay, so we're going to start with the main, what I kind of look at first when I'm looking at claims is the declarations page. This is the key. This is the money shot. So it's where all of the money and general limits are summed up. Okay, they don't all look the same, but there are requirements that they contain certain things. Your name, the location, the policy period. So it's like usually a year, in between. Major coverages and limits, and then they have to list out what endorsements and forms you have, what your deductible is, and who your mortgage company is. Okay, so these are just some slides this says the same as the prior slide. This is a sample of a State Farm policy, and it kind of gives you the idea. So if any of your State Farm customers, you should understand this. Here's the coverage A, dwelling. You see other structures is included in that. B, personal property. C, loss of use. And then here are your limits over here. So those are those. Know that on a lot of policies, they might end up being a little bit higher because there's some inflation coverage, but it's really so confusing that we don't get into it. But if somebody pays you, like if this is your policy, if somebody pays you $846, $846,000, that's likely the reason why. Here's your trees, shrubs, and landscaping. There's some other little things in here. So that is the main. Here's where the deductible is. This is the deductible 1%. It's common now. Wasn't common a few years ago. And then this tells you your loss settlement. We're going to hit all of those. Okay, so what we call base limits are those buckets that I showed you on the first screen. So coverage A, your dwelling, coverage B, C, and D. This is a sample of a farmer's plan, so that you can see just sort of a difference between these declarations pages and how they work. Keep in mind, we'll come back to this, but it says additional living expense term, 12 months. One thing to know is that if there's a state law and it's different than your policy, in most cases, the law applies and supersedes the policy. Okay, so keep that in mind because there is a law in California that it can be no less than 24 months for a declared disaster. Okay, so we'll keep going there. This is an example of a FAIR Plan, California FAIR Plan declarations page. They're a little bit different, and we'll go through this a little bit more. They're all the same for everyone except what you bought has a check mark next to it. So like this policy, for instance, doesn't have any other structures coverage. Maybe they didn't have any other structures. I don't know. So those you'll see, and then you can also see what perils they insure against over on this side. Okay. Renters, this is just a simple renters page from another insurance company, very similar, but you'll see there's no dwelling coverage. And then they don't really list the A, B, C, and D. I've noticed that some companies are going away from that a little bit. It's kind of same idea though. This is a sample manufactured home. Sorry, it's a little bit blurry, but this is just, and mainly these are all to give you an idea that all the declarations pages look different, but they all basically contain the same amount of information. This one is really good in that it really explains what forms and endorsements. So that was a good example. Okay, this is a close-up of the FAIR Plan. So this is what we're looking at, you know, the check marks. So like this one doesn't have fences, you know, all these different things. It's more of like a cafeteria style policy. So be aware of that. There we go. Okay, so now we're going to get into reading the policies. And I know nobody likes to read the dictionary, but in insurance policies, bolded items. So when you're reading your policy and you see something listed in bold, that means that there is a definition for it inside the policy, because sometimes the definition in that insurance policy is different than the common definition that's used every day. Okay, or they want to make sure that it's really specific. So I put some things in here. This is a State Farm, what a residence premises is. This is what an insured is. This is a nationwide, whoopsie, sorry, nationwide policy. So when you see covered property, this is a definition of actual cash value here at the bottom, number 13. When you see covered property, then you say, oh, it's bold. Let me go back and read what's covered property. Okay, so that will help you get around. This is just an example, another example of coverage limits and how they're laid out. So you can see your actual dollar limit may be a little bit higher because of endorsements and inflation and stuff. Okay, so each coverage has each company, and even companies that write multiple policies. Farmers, for instance, has kind of a wide variety of policies. So you can never really say, oh, the farmer's policies say this. State Farm has one homeowner's policy in California. So everybody has the same policy, plus or minus the endorsements. But each company or policy has a different definition of certain things like coverage A. So these are just examples of different policies and what each policy defines as the coverage A dwelling. And you can see one thing that people miss sometimes is that if you had a bunch of construction materials, but you hadn't used them yet, those are coverage A. It's one of those things. And then some of them, like, see this one on the bottom left, it says appliances that are built in. Okay, that's pretty common, but this policy says it. So go there. Okay. Coverage B, and I'm just doing an overview of these first, is other structures. Sometimes it's called dwelling extension. Those are things like fences, retaining walls, swimming pools, hardscaping. The hardscaping, which is like landscaping and things like that, say with a caveat, because some companies put that in landscaping and some companies put that in other structures. So you have to kind of read your policy. I'd say other structures is the coverage that varies the most between the different insurance companies, but in general, it is structures that are separated from the dwelling by clear space. Okay, so if there's like a utility line or something, usually that doesn't count, but if it's attached to the building, so if you have like a carport that's completely integrated into your building, that carport is part of the house. But if you have a detached garage, that is another structure as well. So you have to read that one. Okay, this is just showing the coverage limit for other structures, just an idea of how to find it. These are some examples of what I showed you on the coverage A, but here, look at this one. This is a State Farm policy. Here's other structures is under coverage A, okay? And then this is, I think this is a farmer's policy that talks about separate structures. The bottom right hand here, the reason I put that there is because in coverage B, we have bolded terms everywhere. So I pulled up the separate structure definition from this policy and see it tells you what it is. It includes buildings and building structures and fences and walls and sidewalks. So that's one of the reasons why definitions are important, because these two things are in two far separate places in the policy. They're in completely different areas, so you wouldn't necessarily see them together like this. Okay, so coverage C contents, same thing. This is your personal property. There's a coverage limit. They have, turn it upside down and shake it, and whatever falls out is personal property, but outside too. So your lawn furniture, yard furniture, things like that. If you could take it with you when you moved, then that is generally considered contents. Okay, covers it anywhere in the world. So if your property was in someone else's house and it burned down, then you still have coverage. You might get some guest property, and then there's a bunch of rules on coverage state contents. Okay, so here's some examples, and I'm sorry I'm going fast. We have a lot of slides to get through, so I'm kind of going through fast just to give you the lay of the land here. These are, again, what different companies consider to be personal property and what they cover, okay? So that's the same idea there. These are some common special limits. So if you had any of these inside your house or on your property that burned, know that you might have a limit on those, money, securities, things like that, passports, things like that. Be aware that a lot of policies have jewelry and firearms limits. And it'll say straight on your policy, jewelry limit, and it'll have you maybe 1,500 with a slash to 2,500, which means 1,500 per item, 2,500 aggregate, total. Those generally don't apply to fire. Those are generally theft limits. So if you see those limits, go into your policy and read it so that you know. I've seen them applied on fires before, and people have to go back and say, wait a minute, what's happening here? Contents also has a big list of things that aren't covered. Obviously, there's a lot of things out there that could be under there. They don't want to insure everything, but if you have a separate policy, a lot of times art or jewelry, you have a separate policy, maybe on a wedding ring or something like that. Sometimes if you have a separate policy for your business, anything that's specifically insured on another policy is not covered on your homeowner's policy. If you run out of limits on your other policy, like a business policy, then it's worth it to just approach your adjuster and ask them if you can use some of the limits. Animals, birds, and fish aren't covered. And if any of you have tenants, none of their property is covered. Roomers, boarders, no motor vehicles, except for most of the policies will cover like a golf cart that's on your property. Some cover ATVs. Those are really specific. So if you lost something like that, look for it. RVs, trailers, campers, all those things, they're not covered generally. Again, read your policy. Okay, so jumping on to loss of use, also called additional living expenses. People in the industry call it ALE all the time. So this is where you find this right there. Same idea. It used to be that a lot of policies had what's, and some out there, and you guys might be one of them. If it says actual loss or actual loss sustained right here where this number is, the 120, that means you don't have a monetary limit. That means reasonable costs to maintain your standard of living. So that's a really good policy, good coverage. Whoops, we left a Colorado thing in there. What's going on here? There we go. So this is just to let you know that the coverage and limits and terminology vary by company and vary by name a little bit. So just keep a lookout for these different terms. A lot of times in California, if you have a total loss, there's now a law that says they have to upfront you, advance you 4 months to get you going. That's to help you get like the security deposit paid. There's a lot of expenses associated with being dislocated. So that's what that is for. If you're not a total loss, if you have a smoke loss, it's worth asking for, especially if it's clear that you're going to be out of your house for a long time. One of the things that we always say is that even if it's not provided in your policy, ask, because if you don't ask, it will never happen. So it's always good to ask. There's some policy language that talks about how additional living expenses are determined, how much, how they figure out what to pay you. And we'll talk about that a little bit further in here. But generally, it's fair rental value, what your home would have, rented for had the fire not occurred, or rent that you actually pay for a comparable temporary residence. Okay. Most policies, once the advance period is over, they'll reconcile that. So keep that in mind. If your insurer gives you a 4-month advance of your ALE, know that they're going to come back and do accounting later, right? So you're going to have to start from the beginning on your accounting. They're just giving you that in advance to help you pay it. So, but it can pay for housing, it can pay for rental furniture. We don't have food in here, but it can pay for food if you don't have a kitchen, like if you're living in a hotel right now. Keep track of your food expenditures, laundry costs, things like that. And we'll get into it a little bit more later, but it's the increased amount above what you normally spend over and above. Okay. Your mortgage payments aren't covered. Unfortunately, even on a burned house, you have to make your mortgage payments unless you reach an agreement with your mortgage company. So rent is an increased amount. Okay, so this kind of gets into it a little bit more. Rent for temporary housing. If you need a renter's insurance policy, that qualifies. Before you buy a renter's insurance policy, talk to your agent, because some insurance policies, a lot of insurance policies will pay for you to be in that temporary house while your home is being rebuilt, and you might not need to, spend the extra money for that insurance. Extra miles to and from work. So if you're obviously away from your house, but if your temporary home is maybe, half an hour farther away, that keep track of your extra mileage. So if it was 5 miles before and now it's 10, you get that 5 miles a day reimbursed back to you. Setup fees, you got to get internet, phone, I guess I don't do phones anymore, but all those things that you have to set up, the utility deposits and things like that, photocopies, things that you need to do. Moving costs are really important. Pet boarding costs, if your pet can't be with you right away. So there is also a law in California that insurance companies are supposed to provide you with a list. I think you have to ask for it. So certainly ask for a list. There's also a list on United Policyholders website that talks about what is included. And that's important because they might have things on their list that you don't think up off the top of your head, and it's impossible for an adjuster to really tell you everything that would apply. Okay. Fair Plan has a few little idiosyncrasies, so we wanted to hit those really fast. they call it fair rental value in their policy, and look for the check mark next to the coverage D, fair rental value. If you have a check mark, that means you have coverage in addition to your coverage A limit. Okay, so it means it's its own coverage. So, and you should have an amount there. If you, and this is the language that they talk about, and this is pretty standard with most policies. Your house has to be uninhabitable. We'll hit that in a little bit. Here we go. If you don't have the check mark, know that you still have some fair rental value coverage, but unfortunately, it comes out of your coverage A limit. So, which means it reduces the amount you get to rebuild your house or fix your house. The advantage of this is that you can get a little money up front, maybe a little easier than you would waiting for them to make a coverage A settlement. So you might want to ask for the fair rental value, and then you get, because it's all the same bucket, so you can get some money released a little bit faster. Okay. So let's talk about ALE versus fair rental value. I should have changed that. This should say fair rental value. So ALE, additional living expense, or actual additional costs that you incur to maintain your standard of living. Okay. Whoopsie, I keep doing that. Sorry. Incurred, there is a legal definition of incurred. I'm not a lawyer, but incurred means you're obligated to pay. And feel free to explain that to the insurance adjusters, because a lot of the adjusters believe that it means that you've already paid for it and you're getting reimbursed. But incurred actually means like you've obligated yourself. So make that point. And so that's your actual amount. Okay. And we'll talk about standard of living in a little bit. Fair rental value is, like I said earlier, it's a negotiated amount. So we go out, look at how much would your house have rented for, a 3-bedroom, 2-bath house, this many square feet, you've got, I don't know, some on a cul-de-sac or whatever. If there's specific features of your house that you need or want, then you're entitled to get those. Be careful, because if you have a limit, you might not want to get to use all of the cost to maintain your standard of living. A lot of people choose to live in a smaller place because if they, especially with the inflated pricing that's going on right now, if you maintained your standard of living, you might run out of benefits at the end. Okay, so you want to make sure that you make a mental calculation of, if your house is gone, it's going to be at least 3 years before you're going to get back, probably. And you need to do the math and figure out if what you're paying in monthly rent is going to last you through. Okay. So, and also check your policies, see which one applies. And then even if your policy says the ALE that you have to incur the costs, again, ask for it and see if they'll go along with that and say, hey, look, I have a limit. I'm afraid I'm going to run out. Let's negotiate something so that I can try to make this through. So to make the best deal for yourself if you can. This is just a breakdown of the language, and I almost took this out, but if you have a smoke loss, this is really important, okay? Total losses, this doesn't, really apply to you, but this is important. Uninhabitable, unfit to live in. Keep in mind that this is on a case-by-case basis, okay? If you are really sensitive to smoke. I just talked to someone today who had a child who can't at all be exposed to smoke because he's got some lung issues. So uninhabitable means a little bit different to different people. So if the smoke situation is causing it to be uninhabitable, really know that you can talk about that. That's one of the things that has kind of a wider definition. Okay. Some policies say that your property most policies say your property has to be damaged to make it uninhabitable. Some policies don't, because one of the problems that some of you partial smoke loss folks are going to be in, and is, if I was there yesterday, a house, um, which is the only house in the neighborhood that made it through, which is, great, except for everywhere you look around her house is burned. And so, as they do debris removal and different things, all that stuff's going to kick up. So that's something you need to talk to them about in terms of habitability. Okay. Um, okay, this is just a reiteration. You get your increased cost over and above what you normally spend. They're going to, you still have to pay your mortgage, so your rent is increased. If you're a renter, and you used to pay 1,500, but now you pay 2,000, then that 500 is an increased cost. Be careful to if you're a renter, to discuss whether or not you're going to go back. If you want to make sure that if you're in a temporary location and you have every intention of going back, that you tell them that, because one of the things that ends the ALE coverage is it's the shortest time to repair or replace the property, or for your household to settle elsewhere. So if you move to another apartment permanently, it's over. If you buy a house to replace your lost house, then that could stop your additional living expenses coverage. So if you do that, there are people who I know who have done that, especially with the rental market being bad. They're saying, well, I can buy a condo and live in that, and it'll get me through. You need to be careful that you tell your insurer in writing that that is not, that you intend to rebuild your house, and that you intend to, this is a temporary place, and you're going to have to negotiate with them a little bit. Some carriers are easier than others on that. Food, they're going to ask you how much you paid for food, how much you paid for utilities. And the reason they ask that is because they'll subtract that. So if you're spending, $1,000 a month now and you spend 500, you only get the increased. Okay. This talks about your standard of living. Again, you're entitled to it if you have enough coverage. Make sure that you're being offered something that's going to make your family comfortable. One of the things that I have to say, because I've been involved in so many of these fires, is that make sure that what you choose you can live with for a while, a long time, because they don't want to pay to move you over and over, unless of course if they instigate it. But some people are like, oh, I'm fine here, and then at the end of a year they're like, I'm sick of being here in this tiny little place. We saw that a lot with people who were living in motorhomes and stuff like that, and they just said, no, I can't do it. Okay, we already talked about how long. This is the shot on how long. I just went ahead and put the whole code in here. I know it's a lot, but especially if you have an out-of-state adjuster, just know that 12 months that you saw on that declaration page does not apply. Okay, the law says it has to be at least 24 months. The one thing that I hear people get most confused about on this is, I get 24 months no matter what. And that's not the case. It's subject to the other policy provisions. And the kicker provision is the shortest time required to repair or replace the damaged property, or for your family to relocate elsewhere. So that is, whoopsie, sorry, I keep doing that. That is key. What did I do? Ah,
You're
that's
doing
really
fine.
weird. There we go. Sorry. So the next part is also really important. So they have to see the word shall. Shall is really important. They shall grant. That means they have to. For another 12 months up to 36, if you're acting in good faith and you're doing the best you can, but you still have delays. I've heard that, the debris removal is going to take 18 months, things like that. Those are beyond your control. Okay. Excuse me. You can't do anything about that. If you have things like, you find a contractor and you're about ready to sign and they back out on you, document it. Get the name of the contractor, the day you did, everything you did, document it just as well as you can, because people say, oh, well, this happened and that happened, and the adjusters are like, well, show me. that you did this and this is beyond your control. They're going to want to see documentation between that 24 and 36 months. I've really seen them be pretty tough on that. Permit delays, what's the date that the permit was turned in? How long did it take to get issued? How long did it take you to find a contractor? Contractors are going to be a big issue in this because there's a shortage already. This sentence right here is also, it's really important. They've got to give you additional extensions if things are happening beyond your control. And that's really the limitation on all this is the policy limits. So that's one of the reasons why you really need to think about how much is that monthly expenditure and how long can you anticipate being out and make that last through this amount of time. Here we go. Okay. Get creative. I don't know. Sometimes, people buy, like I said, condos, houses, fifth wheels, all sorts of things, tiny homes, temporary things. So ask before you do anything creative, and make sure everything's in writing. Okay. And when you write to them, talk about, hey, look, I have X amount. I was just talking to somebody, their ALE would run out in like 8 months if they had to rent a place in LA near where they live. They'd just be out. So say, look, I'm going to run out if I don't do something creative. So help me here. Okay. So now we're going to jump to some additional coverages. We had A, B, and C there. This is, these are some other things. So we've got debris removal, trees, plants, and shrubs, and we've got some temporary repairs. So debris removal is a big ticket item. It's, obviously what everybody's talking about right now. Um, this is the link to LA County. And I guess it just came out today. I haven't had it, I've looked at it, I haven't had a chance to really do it, but make sure, you understand what you're signing. I have to say, I used to be really leery about this, but in the other fires that I've seen, 95% of the people came out a little bit better with the debris removal. Um, and I think
Yeah, if I can
especially,
just pop in for a
yeah,
minute on this,
absolutely.
the the you are protected under the agreement. If you participate in the coordinated debris removal, you're not going to be billed any more than the amount of debris removal coverage that you have in your insurance policy. If you go private, it's really hard to say what the cost is going to be, and we're hearing estimates that sound pretty high, a hundred
Yeah.
thousand or so.
Yeah. And especially in Palisades, because of the access issues. The other thing that the consolidated debris removal protects you from is like contamination and disposal of contaminated soil. It's a really big issue. It has to be disposed of properly. And I did hear stories about people getting, like, cut rate debris removal from people, and they just go dump it in the landfills, and then it's a huge problem. So that's another reason why I think it's probably a good idea. But know what you're doing. Don't spend your debris removal benefits until um they're yours. Sometimes, I don't know, I haven't read this, some of the programs have, if you're really underinsured, they would let you keep it, but I don't know if that's been negotiated here. I haven't heard that yet. Um, Here's some things. One of the things that you might have debris removal for coverage A. Sometimes it's hard to get the insurers to pay for that, but take photos of everything. If you get a private firm, make sure they comply with the county requirements. Know whether or not it covers the cost of removing dead trees, shrubs, and plants. I'd say most of the time it doesn't. And the reason for the photos, there's a couple. One, they show you needed debris removal, and two, sometimes you can identify items that you lost, and document them a little bit, especially if you have something interesting. Okay, so these are some common languages. I piece this one together, but it just talks about it. It talks about additional 5%. Not every policy has an additional 5%. Know that there are some policies out there where the debris removal is included in the bucket for your house for coverage A. So look for the words additional insurance, okay? And that's a very important thing. Also, a lot of these talk about expenses incurred. So you have to, this is usually in, well, yeah, they usually pay it. Okay, so let's jump on to trees, shrubs, and plant. What is going on here? My mouse is doing weird things. Okay, so tree, shrubs, and plants. Historically, I've seen this as a nice, easy coverage to get released. Sometimes, okay, I didn't even touch anything. Um, it covers your landscaping. Fire's covered, so you don't have to worry about that. So if you have the coverage, and most homeowners policies do, Fair Plan doesn't, unless you check the box. It usually gives you 5% extra. It includes debris removal. It's for everything. So the cost to get rid of it, the cost to buy it, the cost to install it, the debris removal, everything. Whoops, cross-reference with your debris coverage to see if you can kind of piggyback. But sometimes they'll release this right away, and you can sort of use this, for other things until you get there. These are just some examples. One of the things, and I should have gotten two, I just noticed today that I have two that are the same, but there's a per tree, shrub, or plant limit. So they're either 500, 750, $1,000. I don't see too many. I've seen some at 1,500 per tree. So unfortunately, if you've lost big, beautiful trees, you're only going to get that per each tree, shrub, or plant. So you need to look at your policy and see. Also look for those words, additional insurance. Again, additional insurance. So most of them are. Okay, I also had a thing on temporary repairs. I didn't have a slide. If you if you had to spend money to try to save your house or board your house up if it's still standing, anything like that, turn those into your insurance and they should reimburse you to that. Okay, so understanding the lingo, we are going to move on a little bit. A lot of questions we get a lot are, how are you paid? Okay, those are called loss settlement provisions in the policies, and you hear these words: actual cash value. The lingo with the adjusters is ACV, um, or replacement cost. It's RCB. Two things. And the most common question that I get is, I have a replacement cost policy. Why are they? What's that? Somebody just sent me balloons.
The computer wants to party.
Why am I getting paid? Why are they depreciating my stuff? I get the question every single day. If I have a replacement cost policy, why are they depreciating my stuff? It's because in, I'd say, 90% of the homeowners policies, it says you have replacement cost coverage, but the loss settlement provision says we're going to pay you actual cash value until the property is repaired or replaced, and then you can make your claim for the rest. Okay, there's a few policies out there. State Farm's dwelling coverage does not depreciate. There's a couple of others. Some of the private client policies do not depreciate the building. Almost, don't remember the last time I saw a contents coverage that wasn't depreciated, so that's always going to be depreciated. So look at your loss settlement provisions, and also the provisions that are there. If you find the words loss settlement, a lot of times they're modified by endorsements. So even if and I'll show you an example, but even if your policy says something is one way, sometimes an endorsement gives it back to you. A quick thing is California law actually says that you're owed reasonable amounts actually and necessarily spent to repair or replace the damaged property up to the policy limits. So know that. It's a tough one because you have to reasonable is the key word there, but you're not necessarily stuck into a certain amount for something. So just know that. So this is a little bit more in-depth. California insurance code has an actual definition of actual cash value and depreciation. Okay, so if your policy is a replacement cost policy that says that your losses are settled at ACV until the repair or replacement is complete, then they have to pay the cost to replace what you lost less reasonable depreciation, and I should have put this in, based upon the condition of the property, age and condition. So condition is really important, especially when you're talking about your contents. And they can only depreciate things that wear out, okay, over the lifespan of the property. So for instance, in most cases, your floor framing underneath your floor doesn't wear out. It's not being touched. So that wouldn't be something that would be depreciated. It might be depreciated like over a 300-year period, something like that. So then replacement cost is what it'll cost for you to replace it now. Okay. Be wary if your actual cash value settlement comes with language that says that they will not exceed the replacement cost. So what you're going to get is you're going to get like these huge multiple pages of estimates and contents inventory listings that calculate your damages. And they're going to show like the replacement cost plus tax and the subtotal and then depreciation. And then that's going to get to your actual cash value. So if I've seen some situations where the cover page says, we will not pay more than the replacement cost listed, know that that isn't the case. If the actual cost to replace the item is different than what they decided the actual cost to replace the item is, then you get what the actual replacement cost is. Okay, that's important to know. Okay, these are just sample loss settlement provisions. Sometimes you're going to see, even if you have a replacement cost policy, you're going to see certain things are settled on an ACV basis. And then you might see this, or you might see how this says personal property. That's kind of a big deal, right? At actual cash value. But look for an endorsement, because a lot of times the endorsement will add it back in. But then mobile home policies are really the most common ACV policies. They're kind of like cars. So they do it that way. Okay. This is an example of that same language. So this one right here that I just showed you with this loss settlement provision saying ACV. Well, if you go to other parts of the policy, you see that somebody bought a replacement cost provision. And if you read it, it says that we're going to pay for replacement cost for coverage A and B. And then it talks about some other, other things. So sometimes if you think it's not there, it might be. Okay. This is the most common. This is very common language here. And this talks about, how we settle covered losses. And it's basically saying we're going to pay the reasonable and necessary amount spent to repair the, whatever's damaged. And then once it's repaired or replaced, we won't pay more than 25 actual cash value until it's repaired or replaced, and then they will pay the difference. If you look in, it's either going to say loss settlement, how we settle covered losses, things like that. If you see something that has a bunch of percentages, like 80%, be aware and talk to somebody about it. I should have put an example in here, but there are some co-insurance provisions, and I'm seeing them a little more than I used to. And they are penalties. If you're like severely underinsured, there's some penalties. So before you make your claim, if your policy says like if your loss is insured for 80% of the covered, the coverage A limit, you're going to get X. And if it's more than it just be sure to have somebody look at it. It's really, really complicated, and there's a formula that goes along with calculating the penalty. So if you see the words 80% or 90% in your loss settlement provision, get some help. Okay, this is an example of a full replacement cost provision in the policy. Notice right here, there is nothing about depreciation. And this policy I happen to know, and there's nothing about depreciation anywhere else. So that's just an example saying we're going to pay up to the limit to repair or replace. Okay, so now these are some little added coverages here. And these are endorsements. Okay, you can have all sorts of endorsements. They're part of your policy. They're important. You know, they can add coverage, they can limit coverage, they can conflict. Sometimes they're super confusing. So ask, but the ones that are important are, we're gonna go through them. When you're looking, sometimes it's not easy to tell whether you have certain coverages or if you have endorsements, like what they even mean. Okay, so for instance, this here is nice and clear, right? We've got the increased dwelling, and they even give you the amount, right? In the ordinance, they give you the amount. That's nice and clear. Right here, this is replacement cost, and you paid 22 bucks for it. It's like, well, what does that mean? Is it replacement cost? Whoopsie, for this, that was my fault this time. Um, you know, it's what do you mean? So that you have to go look. This right here, this like Home Protector Plus, what is that? You have no idea what that is. This Home Protector Plus happens to be a extended replacement cost endorsement that gives you a whole hundreds of thousands of dollars worth of coverage. So these are super important. Okay, you have to kind of look around. The most important one that you're going to look at, a few are built into the policy, but most of them are endorsements, is extended replacement cost. Okay. They can go 25, they're percentages normally. I've seen some up to 200%. But what they are is if your coverage a base limit, okay, that's the first thing we talked about. That's why we talk about base limits. If it's too low to fix your house and you have one of these endorsements, that means you get a whole other bucket of coverage to pull from, and it's really, really helpful. Okay, they have different names. This option ID is a State Farm name. Building, they call it BizRel. If you talk to your Allstate, I talked to an Allstate adjuster once, and she was BizRel. I'm like, what is that? But that's building structure reimbursement extended limits. ERC, people call it extended replacement cost, but those are all different names for the same coverage. Okay, and it's really valuable. Additional funds. Okay. They'll tell you most of the time how it's paid, either in the loss settlement provision we were talking about or in the endorsement itself. It'll tell you. Most of them require you to actually place the property before they release it. Wildfires like this, sometimes carriers will release it without having to rebuild yet, but it'll be in your policy. Okay, most policies extend the benefits to coverage A only, but some policies put it on everything. Same with debris removal. There's a couple of companies that the debris removal is 5% of each limit, so that's important to know. Okay, these are just some examples. I mean, look at how long this is. So it's complicated coverage. Ask your adjuster to explain it to you. And just know, now you know the basics of how it works. So then you can kind of have this in your head when you're reading. There's some caveats, you can't have, like, if you added a wing onto your house and didn't tell them about it, 5 years ago, they're not going to pay you. Different things like that. But for the most part, it's great coverage. It's just another one. But they're long. That's one of the things. This is the State Farm over here. It's nice and short. This is the Allstate, this Bizrel thing. So they're long, but they're good. Okay. Another one that's very, very valuable is ordinance or law coverage. It's also called all the time code upgrade coverage. I used to call it code upgrade. I like to call it ordinance or law because sometimes you're not actually upgrading anything. You just have to do it because the ordinance says you have to do it. So just keep that in mind. The other thing is if you have high coverage A limits and low ordinance or law limits, look very closely and make your adjuster explain to you which is in which bucket. Sometimes in these estimates, it's really hard to tell. And sometimes they'll put in things. I'll just give a quick example. If you have like single pane old windows, right? You're owed for what you lost. Okay. Your policy pays to replace your home and contents with what you lost. Okay. But you can't put in old single pane windows anymore. They won't let you. There's Title 24. So a lot of times the adjusters will put your new expensive window in code upgrade. Well, if you run out of code upgrade coverage, but you still have some coverage A, they should put the price of the original window in the coverage A and then just put the increased cost in code upgrades. And I know that's kind of complicated. Just know that if you start to hit limits, there's some things you can do to sort of, if you have limits somewhere else that aren't spent yet, there's things you can do to sort of make that even out. Okay, so that's the point of that. And then one of the things is a lot of people read their policies and say, I don't have code upgrade coverage because this exclusion. So here's an example of an exclusion. Two different places of the policy. We will not pay for ordinance or law. We will not pay for increased costs. People stop. This one says, oh, wait, except for this. Every one of these policies has this here. So this is an example. These are all from the same policy, excluded and then added back, just to make life more complicated. Okay, this is just another sample, just so that you know that it's going to look different for different, and some of them are super long, so they're all going to look different. Okay, so here's the money shot. Here's what we're going to talk about, and I'm sure you've all been waiting for, is how do we know how much we have? How do we calculate it? So this is like a little simplified deck page that we have. Get all your buckets and then start figuring it out, okay? So this example that I did here, these are the big ticket items that go along with your dwelling, okay? The main structure. This doesn't do anything with contents. So you take your limits for the main. These are all the different buckets that you have. Get them lined up, get your policy out, okay? And then do the math. So this example is coverage A is $500,000, which this extended replacement cost policy was 25%. So 25% of 500 is 125. Okay. You don't get to add the percentages. Like you don't get to make this 625 and then add another 20%. You add everything to the coverage A. So you add 125 for the extended replacement cost. You figure out what's your percentage for code upgrades and you add that. Here's your debris removal, but remember, save that. Whoopsie, I did it again. That was me. And then your tree shrubs and plants. So really, when you have a limit like this of 500,000, this actually ends up to be 775. So that's a little better, you know, especially if you're looking at limits that are going to be difficult to replace your house. The other thing is that no, in California, there's a law. So if you have, and I don't think we have this in here, your coverage B, your other structures, if you have a limit for that, you can use that limit to put towards your house, right? So if you have a detached garage and you're running out of money to build your house, you'll just sacrifice the garage and put that money into your house. And you don't have to replace it to get the depreciation. As long as you put it into the main house, they'll release the depreciation there. And that's a state law. So that's really good. Okay. Spreadsheets. This spreadsheet is on the UP website. So this is a really good way to put in your limits. I don't know why we don't have percentages here. Usually there's percentages right underneath these and that self-populates. It's a little bit harder with State Farm because they have different, some of the additional coverages apply to personal property, like State Farm's policy pays for debris removal and increase. But this is a general idea of a spreadsheet, and talk about, this is what your declarations page says. This is what, these are like just sample estimate amounts. And And then this is your limit of coverage, so it'll do it for you, sort of. And then if you keep track of what you get paid, then you can sort of calculate it. You can say, oh, look, I still have $86,500 left in my um, increased dwelling limit, and I have $11,000 in debris removal. So, that's kind of shows you where your money has been spent. So, you can pull that off the website or make one yourself and keep track. I highly recommend it. Okay, and I'm almost done with my part. Advances, you're going to get advances on personal property and ALE for the most part. Know that you have to reconcile those later. Um, Most of the time, you're going to get actual cash value first before they pay you the full replacement cost. And your mortgage company is going to be listed on coverage A payments if you have a mortgage on your property. So it's probably a good idea to contact your mortgage company now, notify them of your claim, tell them there's money coming, and ask them, they'll send you a packet, ask them how you release those funds, and so forth. And then you get the rest of the money that they hold back, ERC as well, extended replacement cost, and code upgrade. Code upgrade coverage gets paid as incurred. So that comes later. Some companies might make the decision to pay it now, but most of the time we see it paid as incurred. Whoops. Okay. This sorry. So they have to give you an advance if you're a total loss. They have to give you an advance on your contents. And I don't know why they did it. It's 30% of your coverage A dwelling limit in advance for your contents. So I don't know why they just didn't do like 50% of your contents limit, but that's it. So if you take your coverage A base limit, multiply it by 30%, ask your insurer to give you that as an advance. That's going to put some money in your pocket. Know that it draws down on your contents limits, but it's also going to give you money that doesn't have a mortgage company. It's going to give you money you have access to. Okay. Um, on the contents, if you want full policy limits, a lot of times you're going to have to submit an itemized inventory. We already talked about the mortgage company. We've talked about all this. Sometimes there are negotiated payments. It'll be interesting to see. Usually we have to get kind of going on a disaster like this to know what company is going to do things. Some pay everything out. Some, make you, kind of go for it. Oh, also this little asterisk right here is this 30% is up to 250. They don't have to advance you more than 250. Okay, and then things to consider. This is my last slide here. Sorry, I know it's a lot.
You're
Consider
doing
opening
great.
up a bank account, to separate bank account. I think it's really helpful. You don't want to turn around and say, "Oh my gosh, where'd the funds go?" Keep track. Keep your running list of coverages, combining coverages to rebuild. You can also use your contents coverage. If you don't plan to replace things, you won't get that replacement cost coverage. But if you've already exceeded your limits, it doesn't matter. So you can use that money and allocate it toward the building if you're having a tough time rebuilding with your current limits. So I think that's my last slide. Yep. There we go. So sorry I talk so
Okay.
fast,
No,
but
no, 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 no. You did great. You did great. Alexis has been a machine answering questions. I marked a few of them. If you want to stop sharing, I
okay.
will pick back
Oh,
up. Um, I marked a number of them, Sandy, for you to answer
okay.
live. So if you want to look at those while
Hmm.
I finish the deck, we will be on the road. Okay. So hi, I'm back. Hopefully, all right. We covered a lot of territory there. And most of the questions that we got were actually not exactly on the topic that we're covering tonight. I get that. People have so many questions, are really
Oh,
anxious for answers, and we very much appreciate all of you being here and just bear with us
I
as we
can't
get
see the
through.
questions. I can't see the questions from the participants. Sorry.
Okay.
I'm like, wait, I don't
All
know
right,
who's
hang on, hang
standing.
on. You can just mute for 1 second. So I
Okay.
just want to recap. You're going to want to keep your paperwork organized in a daily journal. Look, I am amazed by all the information that you just heard because it's obviously very thorough and comprehensive. But I want to acknowledge that for a lot of you, this might be too much, and that's okay. You have options, if this is just something that you now feel like, wow, I'm not going to be able to handle this on your own. Again, do not give yourself additional stress beyond what you already have. Take things one step at a time. If you want to go back and review this, you will have time to do it. There are professionals out there that can help you. Remember, you want to understand your options related to debris removal. And I get the pressure to want to make all these decisions right away, but the reality is that the guidelines just came out today. Okay? So just let's all take a breath here on what will happen if you didn't have coverage for ALE. Can you participate? Or debris removal. We'll figure those things out. We're not going to be able to answer everything all at once. So we're all, not only is my team doing our best to keep putting one foot in front of the other, but that is our advice to you to really try not to think that you have to figure everything out at once. Okay. You heard you're going to want to budget and use your ALE wisely so it'll last. Think about mortgage forbearance. If you need a breather from having to paying your mortgage. There's information on our website about that. And in the downloadable guide, where we have information from Fannie Mae about how that works. A reminder to check references carefully before you hire anybody, and know that we will be doing similar programs to this one as we go on. This is a link to the samples that you'll find on our website. Um, Remember, we offer, well, I think a lot of you were not with us last week, so we have a much bigger crowd tonight. I really do encourage you to go back and watch the orientation that we did last week. On the recording is on our website. We talked about the Survivor to Survivor webinars that we offer. It's a virtual way for you to commune with other people who've been there, done that, went through a fire, or have walked in the shoes you're walking in now, and also talk to some of your similarly situated neighbors, but in a calm place with people there who can really reassure you on some of the things that may be stressing you out. Um, then this is the DOI hotline number for filing a request for assistance or a complaint. Um, Next week, we will have a short webinar on some of the options for replacing your wildfire destroyed home. And we'll be covering some of the questions that we got tonight, such as if I don't want to rebuild or I can't, what are my options if I don't want to leave insurance money on the table? We'll be talking about your rights to replace by buying. We'll just give a very broad overview to help you make these decisions in a calm way. So that's it for the slide deck. So Sandy, if you are having trouble seeing the open questions, I'm going to read them to you out loud. Um,
Yeah, go ahead.
so
I found
State
them, but
Farm policy, what is the meaning of debris removal with this additional 5%? How does that 5% get calculated?
it's calculated from your coverage A base limit. And I believe the State Farm policies include debris removal for contents and and other structures as well. So you take your coverage A and you multiply it by 5%, and that's how you get there.
Thank you. And so we got a question from Kate. Does that mean that the insurance company has to double the amount? Okay, she's asking about the 24 months that your ALE has to be
Yeah,
available to you. Does that mean it has to double it, or just you have to stretch
no.
it to the max amount over 2 years?
Yeah, and I just heard today that there's a rumor going around that that it every year the limits come up. It is not. Your policy limit is your policy limit. So that limit has to make it through whatever period of time that you're out, 24, 36 months, whatever. So that
And
is,
this came out of in the old days, before we worked very hard to get a lot of laws in place to make
mhm.
your journey a little easier. Most policies had and still have a 1 year, that your ALE, your temporary rent was only available for 1 year. Because that has become so unrealistic, we pushed for this law, which now says that it has to be available to you for at least 24 months, with two 6-month extensions up to 36 months. But that does not increase the amount of available benefits. Okay, next question. Our policy has a clause that we're eligible for 50% above our dwelling limit if we have a signed contract from a contractor that shows the cost to rebuild is above limit. So this is the extended replacement coverage that Sandy talked about. We don't plan to rebuild, but we want to use the insurance money to buy a home. Are we eligible to get that bump of that extra 50%? And if so, how?
Yeah. Um, California has a law that says that you are not tied to your property. You can rebuild elsewhere and you can buy elsewhere, and you can take all of your policy benefits, your coverage A, your extended cost, your debris removal, your
Code
everything, you can
upgrades.
take it with it. Code upgrades can all go. You have a good policy that says that if you sign a contractor's um contract, talk to your insurance company, read the policy provisions, because without knowing exactly what it says, I couldn't say, that you have to get that contractor um, amount. But call your insurance company or talk to somebody and find out, because most of the time what they do, I've helped some people get relocate, and what they do is they'll hold that ERC and they'll release it into escrow when you buy a new property, or pay you at that time and then you can use it to pay down your loan, different things like that. So there's a lot of variables there that you look at. Keep in mind that you're going to have to pay off your other mortgage first. So people sometimes don't think about that. If your bank is holding your coverage A and say, half of that is what your loan is for, then if you decide to move somewhere else, they're going to take that, pay off your loan, and give you the balance to go buy something else. So keep that in mind when you're making these decisions, and be careful. If somebody asked me a question today about being pressured to pay off the loan, look at your loan documents. There's a few loans out there that say they can do that, but I don't think most of them say that. Look at your loan documents and know whether you can get a loan if you need to buy another place before you pay off the old one.
Yeah, the bottom line
Mhm.
is that most people's mortgage rates that you have currently are much better than what you
Better.
get today. So you really want to
Good point.
think about this and get good advice before you make a decision. I did promise we were going to end at 6:30. We'll just answer the questions that we had already pegged to answer live. The
Mhm.
rest of them, we're just going to have to answer them at a future program. We really appreciate everybody's patience, but we want to make sure that we don't overtax either our volunteers or all of you out there. Is it reasonable for us to pay the security deposit for our rental since it's refundable and not considered as ALE?
Yes, it is. They're not going to pay your security deposit. If they do, it's going to be refunded to them. So you might as well. And plus, if you damage the property, they're going to make you pay for it anyway. So if you have the money to pay your security deposit yourself, it's probably cleaner to do that. Then you get the interest and things like that. So yes, I would say yes if you can. If not,
Okay.
ask them to pay it and know that they get it back and all of that.
This is a little unrelated, but we got a lot of questions from about smoke,
Mhm.
so I'm gonna throw this one out to you, Sandy. My house is still standing, but we haven't returned because of the smoke, and the water is only partially usable. We're staying with relatives. Does loss of use apply in this case?
Absolutely.
Okay.
Absolutely. It's if your a loss insured, fires insured causes your home to become uninhabitable or unfit to live in. There's tons of toxins in that smoke, just it needs to be cleaned. You need running water, you need power, you need all those things. So yes, and it's going to be harder. Partial losses, it's very odd, but partial losses are harder than total losses in terms of getting what you need from the insurance company. Somebody yesterday said she's the only one in the neighborhood. You shouldn't have signed a 6-month lease because you have to go back in 2 months. We can get your property clean in 2 months. There's no way. There's no way. There's surrounded by things. So
So what is building ordinance or law coverage 50%?
Yeah. So building ordinance law is the same as that code upgrade coverage. We call it the wrong thing. So that's to pay to put your house back to current codes. Okay. So it's a really esoteric, it's kind of a complicated thing, but for the most part, if like your house burned and it didn't have sprinklers and now the code says you have to sprinkle your house, those sprinkler systems are code upgrades. So that's a good
Okay.
example.
Um, you mentioned temporary repairs or a security fence being paid for. What bucket do those would that come out of?
That's one you can maybe be creative with. Read the temporary repairs section. It's usually under additional coverages portion of your policy. See how much you have, 'cause sometimes it's limited. It's usually limited. And if you have a little, ask them, hey, look, I'm going to run out of my coverage A. Can I use this on my cover? And I had to do it because somebody's going to loot my house. So just try it.
Okay. Rafi, we're not going to be able to answer that question about a lawyer tonight. So if you want to shoot that question to our Ask an Expert forum, we will get you an answer through that. Does State Farm cover air quality testing typically?
I was told
We could
directly
spend
to
some
my
time on
face.
this one.
Yeah, I was told directly to my face yesterday that State Farm does not cover air quality testing. I wholeheartedly disagree. So what they're doing, don't call it air quality testing. That is the deal. That's the thing, because they've got a part of the policy that says we don't cover air or land or something like that. It is fire is your cause of loss. California has a law that if your covered loss is covered, all of the things that are required to put it back. So if somebody tells you they're not going to pay for your asbestos abatement, know that your asbestos abatement is covered if you have to do that. Say you've got part of your place burned, even if there's an asbestos exclusion in your policy. The air quality testing has been historically the most difficult thing to get. But it is part of a protocol. So when you get, and we'll probably do, Amy will probably do smoke, full smoke webinars later, but when it's really good to get a protocol for cleaning, because it's not just like house cleaning. And there's recognized methods for removing fire particulates. They dry removal, wet removal, all of this thing. And part of the protocol should be post, and write it down, post remediation particle testing. Okay. So to know whether or not the cleaning that occurred in your house was effective and has returned your home to its pre-loss condition. There's a lot of talk about standards, and there's no standard for how much smoke can be in your house. There is no acceptable amount of smoke residue that should be in your house. That at your house, if it didn't, if unless you burn fires inside, you deserve to get a house that doesn't have any fire particulates in it. So what I've done before is say, first off, show me where it says it. These are going to be valuable words. Show me where it says that in the policy. Okay, first thing. They might send you that part that says we don't insure air. You're not asking about the airs. Air testing has to do with things blowing around off of surfaces. And then the second thing you can do is say, okay, well then I would like a guarantee that my home has been restored to its pre-loss condition. Um, and that you can write a letter and say, look, you're denying testing, so um, I'm going to rely on you. If you use one of their vendors, this works better. I don't necessarily recommend that, but especially if you use one of their vendors, then you say, okay, this is your vendor. You write me, or your vendor write me and tell me there's no smoke particulates in this house. And how can they do that if they don't test? They can't. So that's what I would recommend. I think what's going to happen is, and I've seen this before, where they come out and say, we're not going to pay for post remediation testing. And then eventually they do. And they just push back. It's part of the protocol for restoring your home. So really push on that. And I wouldn't want to go into a house. People have different tolerances. I wouldn't want to go into a house without knowing that the remediation that was completed was effective.
So, okay, we're going to wrap up here. I want to say my absolute most heartfelt, deep, and profound thanks to Sandy Moriarty for sharing her expertise with us, to Alexis Ritchie, to Valerie Brown for sharing their expertise with us tonight, for all of you, your time. We got kind of deep and we did get a lot of questions that were not exactly on the topic that we were here to talk about, but we really do get, that there's just this need to get the straight scoop on things, and we are very happy to provide the guidance that we can. That said, our roadmap to recovery programming follows a sequence, and we do our best to cover topics in order. Our next webinar, which will the information will be up on our website soon. Apparently, the link I shared was maybe not good tonight. We'll fix it as soon as we can. And that will be an overview of your dwelling replacement options. Down the road, we will be going into remedying under insurance. We will be talking about smoke remediation and partial losses. We will be covering lots of other topics. We will be covering casualty loss tax considerations, but we can't do it all at once. So thank you so much for your patience. Thank you so much for your attention and your time. We're rooting for you. We hope to see you on a future webinar, and we are so grateful to be able to bring you this information tonight. I want to thank you all again. Thank you to my team. Good evening.